stock market is witnessing a historic crash with major indices plunging to new lows on nearly a daily basis. In this video, what I want to do is I want to go over some worst case scenarios as well as look at critical key support levels, how we're testing them, and what we can expect in the days and weeks ahead. I'm also going to tell you what's giving me the most concern about this market right now that a lot of people are not talking about, but should be. So let's go ahead and get into those charts right now. Quick recap, we have the double top pattern that was formed. It confirmed at the 575 level. We came down below it, formed the bear flag that ran right back into the double top pattern here, and then took the huge plunge to the downside, which has us where we're at today. This has been a massive, massive sell-off, and it has SPY sitting on some critical support levels. Now, we had a huge bounce today, but what it did is it fizzled out right at this 5-day moving average, and that's been a key issue for this market, and in particular SPY, over the course of this sell-off, where it doesn't like to break back above the 5-day moving average. Here, we had another test, and then we completely fell apart again, extending the losing streak for a fourth straight day. But we are sitting on two key support levels right now. The one that goes back to the 2022 highs. Before that sell-off took place, we've pulled back to that level, and so far we have held it. So in order to get a bounce, you need to see three things unfold. And it's very simplistic, but it's good to keep in your mind when you're watching this market go forward. First, you want to see support get tested. That's what we're seeing right now. Then you want to see it hold. So far, it's holding. And then you want to see that bounce, but the bounce needs to hold into the close. We can't see what we saw today where it bounces early on, but then gives back all those gains into the close. So you got to be careful that you're not chasing after it and just making broad assumptions that that a bounce is going to hold without seeing first that it's willing to do so. So we got this huge support level here going back to 2022, but even more so is about three additional levels that we want to keep a close eye on. This yellow line, and it's kind of mixed in with some teal lines as well, but this yellow line represents a rally off of the October 2022 lows. That was a historic moment for the market where it held that level, and since then we've been holding that trend line ever since. We're testing it the last 2 days. So far, we are holding it despite the fact we've been down 4 straight days. You also have another line that goes all the way back to 2020, and that is off of that major sell-off. So far, that one hasn't been quite tested yet, but it's getting very, very close. And tomorrow, if we get another major sell-off, that one's going to be in play, along with the VWAP that goes back to the 2022 lows. So there's a lot of levels off of historic market bottoms that are getting tested. A lot of trend lines and VWAPs that are very, very important here. If you do get a bounce, this declining trend line is going to be in play. Now, let's look at the bigger picture on SPY. And this is the one that does cause some concern. We're going to go way out here and look at the stock market from a long-term perspective. This goes back to the 2008 Great Recession and then the 2009 lows that was formed back in March of that year. Going back to the Asian financial crisis, we tested it. We held that level. And that's what started this trend line from the Great Recession. And then we came back down and tested it during the COVID era. Back in 2020, we tested it and we held it. So we have major market bottoms that have happened off of this rising trend line. The problem is that's about 40% lower. This would be just completely the wheels are coming off of the bus. This would be something that would be rivaling the Great Recession. You've heard me say time and time again, I don't necessarily think that that's the direction that we're going to hit this level anytime soon. Because it's so far down, there would be so many things that would be breaking in the process. I don't necessarily see that in the here and now. If it does happen, then we react accordingly. But for now, we're still looking at these support levels continuing to hold for the market. And until those break, there's really nothing to really get worked up about anything that might be between this rising trend line here at 470 and what we might have down here at 306. It's just too far-fetched at this time. But I want to give you the big picture nonetheless. On the Qs, we're going to zoom in here. And what we're testing right now is also a key support level on the Qs. This support level goes back to the highs that were from July of 2023. This support level, I didn't even really think that there was a lot to it. But my gosh, it has actually done a phenomenal job, so far at least, of holding. It tested it yesterday, tested it again today. Both times we saw a bounce. We saw a mini bounce into the close. We saw a major bounce yesterday that took the index from deep red to green. So that's the major level right there. Obviously, with now lower lows and lower highs being formed in the short term, this declining trend line off the all-time highs, that's going to be in play if we do get a bounce of some kind. What does it do around this 468, 470 level if it gets tested? Going even further out on the long-term basis, going back to the 2020 lows, this is the next level that we have to get really concerned with as a potential testing point for this market. If this level right here breaks, this blue level, then this is the next logical level for the Nasdaq to go down to, which would be this 340. Now, that doesn't mean I think it's going to be a straight shot lower. By no means. I think you're going to see bounces along the ways, but we want to see some of these key support levels hold. This is becoming a very important level right now. This 408 level, so far it's holding. But what I'm seeing the most concern with right now is TNX. This is the treasury yield index for the 10-year. This isn't going down. And if you look at it from a 5-minute perspective, going back to Monday, this logically you would think that this would be going down. And I think that's what a lot of people are expecting, that for these bonds to rally. But you have the 10-year treasury yield actually rallying over the course of the last 3 trading sessions. That is a concern. If that continues to happen, you're increasing the chances that something breaks in the system, because now you have bonds dropping. Now you have the price of bonds dropping. You also have equities dropping. There's really no safe haven. And we remember going back to 2023, back in March of that year when you had the regional banking crisis. And now you're coupling falling bond prices with a market that's completely fallen apart as well. And so there's no telling what kind of problems that could cause if the 10-year yield continues to rise like it is. I try to end these market crash updates with something positive or something just to think about as you approach your trading. I know a lot of people are taking losses right now, and I know it's a very difficult market. One of the things that you don't need to be doing is just constantly throwing cash at this market, trying to predict where the bottom is. I've told you that in previous videos as well. Today was a great example of where people saw a huge gap higher where we're, rallying 200 points to the upside and thinking that the bottom is in and that they're missing out, so they have to get in, only to watch the rug get pulled out from underneath them and start to bleed heavy losses. That's the kind of thing that you want to avoid. You don't have to get in at the market bottom. Let everybody else figure out where that bottom is. Don't be that person that's doing the hard work for everyone else by throwing your capital at the market, because trying to catch a falling knife is almost a losing game every time. Where this market ultimately settles down at, we don't know. Technical analysis is used to help guide us. It doesn't give us assurances, but it tells us that if this happens, this is the kind of concern that you have. This is the kind of edge in trading that you have going forward. Right now, we haven't seen a bottom develop, so we shouldn't assume a bottom until that happens. If you enjoyed this video, I would encourage you to like and subscribe, and let me know down in the comments below, what are you doing after this massive sell-off today following the big bounce that we got early on? Are you still in this market? Are you panic selling? What is going on with your trading? I want to hear about it. Let's talk about it in the comments below. Thank you guys, and God bless.